Okay, hi, it's Martin Shkreli, and we're going to our next installment in investing, and we're actually going to be looking at international companies, so ex-United States, outside, in other words, outside of the United States. And I hope you enjoy this. I didn't prepare too much, but I thought I'd also give you some quick thoughts on the bibliography. Oops. A lot of people ask me what books to read. I don't think you can. I try to be a little coy about books because I'm not necessarily sure that books are going to help you too much. But as I look backwards, I guess I've read quite a lot of them. So I guess I'll throw out a couple that make a lot of sense. So probably the best book. It's not the best book, but one decent book. This is Common Stocks and Uncommon Profits, and it's a very sort of information arbitrage sort of basics, and I think that's important. And then I think a lot of the sort of autobiography style books are important. So I'll throw out a couple of those. I mentioned Noble by Michael Steinhardt. I actually think my old boss's book is pretty good. I only worked with Jim for a tiny, short period of time when I was very young. But it's a pretty good book. Confessions of a Street Addict. I don't think it's a terrible read. And then probably the best book of all would be Snowball. I forgot the author's name is Alice Schroeder. Alice Schroeder. And that's about Warren Buffett. This file is available in the shared drive. It's actually a book, a couple other books. So Barbarians at the Gate, very important book. This is kind of a crazy book, but if you like reading in general, I'd recommend Den of Thieves. It's a book about the 80s on Wall Street. It's a big insider trading scandal on Wall Street, and really, really important and historical book, but also a fantastic book. A fantastic book to read. Let's see. Barbarians at the Gate, very, very important book. A friend of mine who wrote a great article about me wrote a book called The Smartest Guys in the Room. I think that's another one. I think it's important to read about these scandals and stuff like that because the finance side of Wall Street is actually pretty easy. Keeping your head kind of in good shape and being smart about your career and things like that are actually just as important as kind of some of the other things. So there's 7 books that I would recommend. And some of these are more exciting, like these 2 are really exciting, while the other 4 or 5 are pretty dry. So part of it is also sort of exciting books to read. So anyway, let's talk about international investing, and I think this is a pretty important concept that a lot of people don't understand. International investing is let's see here. International investing is one of these fields that a lot of Americans tend to avoid. And I think they avoid it because they have a lot of misconceptions. And like many things in life, opportunities come from misconceptions. And so the misconception most American investors have, and I only say most, not all, but many American investors have, is this feeling that they can't understand international securities compared to U.S. securities. And I know that most so-called retail investors or individual investors are the same way. They fear that there's some kind of access issue to international companies, or there's other dynamics like that at play. And I actually would prove to you that it's actually the opposite. So I'll show you a little bit how that works. in a second. In fact, I hope to convince you at the end of this that you should focus almost exclusively on international stocks, which is really, people are surprised when I say that, but here's why. So let's just do sort of domestic and foreign. We'll just call that US and ex-US. And we'll sort of do I wouldn't call it pros and cons, but we'll kind of try to do a pros and cons thing. I have to practice with the stylus. I'm not fantastic at it. All right. All right, so the biggest issue when you're an investor, what would you guys say the biggest issue is when you're an investor? What are you trying to get the most, what are you looking for when you're an investor and you're trying to figure out what stocks to invest in? Akil already beats us to the punch. What do you guys think? What's the number one issue? Number one issue. Arbitrage. Wow, great job, Ping. Great job. It is arbitrage. Arbitrage. And I've talked a few times about thinking about arbitrage as a variable, and define arbitrage as kind of arbitrage is the Martin Shkreli definition of arbitrage. Arbitrage. Let's make up a variable. Let's pick Greek alphabet. Let's pick one of these bastards and actually use it. Let's use new, because new is not used much. Doesn't get a lot of love. All right, so we'll call it new. Arbitrage is the tendency for a security in a group of securities for maybe one security, and we could say the probability or tendency in a group of securities, for one security in a group of securities to be mispriced. And obviously, this is sort of we're going to use this as the noun for our self-described variable. We can also define it as a verb. To arbitrage something is to capture the arbitrage opportunity. And it's funny, in the 80s, hedge fund managers, when you read Den of Thieves, you'll see the hedge fund managers used to call themselves arbitrageurs, or arbs. So it's funny to see how the nomenclature changed in the 70s and 80s. That's what they use. So anyway, the reason that it's important to think of arbitrage as a more complex concept than just a verb or a noun is that if you think about it as a variable like new, you can actually say that what tends to increase arbitrage and decrease arbitrage. You think about arbitrage as dispersion. If you think about it as a scatter plot, right? And you say this is new, and this is, let's see. Yeah, let's just say this is whatever variable we want to select. I don't know, let's pick. Well, let's see. So you have stocks. Let's say this is a fair value line. This is fair value. So arbitrage is, you could define as distance from new to fair value, right? Or arbitrage is fair value minus market value, right? And so the distance, you want a stock market that's like this, right? You want a stock market where the distance is maximized, right? You want stocks that are out here, super overvalued, super undervalued. And the x-axis can be something as simple as market cap. So pretend that the red lines are the Japanese market and the black lines are the American market. it looks like the American market has a lot more securities trading near fair value, and that makes it very hard. Small caps, large caps, they're all kind of trading near fair value. Whereas the Japanese stock market has many, many outliers. And so one has to think about, especially if you sort of like quantitative finance, and I encourage you to like it, one has to think about what situations does this variable mu, what situations cause these distances. We'll call this, we can call this another variable. We can call it like mu as delta from, it's basically delta from fair value, right? So what causes mu to change? What causes mu to change? And how do we get maximum, what situations do we get maximum mu or minimum mu? And yeah, liquidity is a major impact. So when there's a lot of liquidity and stock markets have a lot of players, I think liquidity and number of players is basically sort of two major things that inversely correlate with these variables. Bull markets, sort of sentiment is another one. If there's an extreme bull market, you can get serious deviation from fair value. Anytime there's a crisis, some big crisis, whether it's a bank bailout or whatever it might be, that increases mu quite a bit, or nu. I guess we're saying this is the same thing. I'll just call it mu. So in any event, we kind of want to look for markets where we have more dispersion around that. So the reason that domestic stocks, they have more players, the U.S. market is basically dominated by quantitative investors and hedge funds and all these things, whereas the foreign markets have less players and they're therefore more interesting. So that's sort of the big plus, and then stocks, we only care about that. So that's the plus, but there are minuses. So minuses, one issue is language barrier. English is the language we know, and here it's sort of anything goes. And there are companies that will not issue press releases in English, and so forth. The next is sort of regulatory barriers. So here we have the SEC, and we're used to it. And here again, anything goes. So this is a big minus. Then we've got things like language. Wow, thank you. Trading hours is something a lot of guys don't like. I think it's sort of silly because I'm a long-term investor, but one is while you're awake and one is often while you're asleep. Another one is currency, where you trade in the dollar versus anything goes. And the last thing is sort of your business network, your brokers, your relationships, etc. And if you only know people that are trading U.S. stocks, you kind of want to trade U.S. stocks because, So there's a lot of drawbacks. But if you like making money, which is what the goal of investing is, you definitely have an advantage in foreign markets. And then the other, I guess, slight advantage is complete understanding of your sector. So I remember following the video game sector, and Nintendo and Sony are only traded in Japan. I think that Sony has an ADR, but the point is that you can't really understand your sector if one of the biggest players is foreign based. So you have to sort of get used to understanding that. And then finally, so that complete understanding is actually pretty important. So I tend to think the first two dramatically outweigh the other five, which are overblown. Most companies do issue releases in English and whatever local country. Currency is not a problem. In fact, it adds some diversity to your portfolio. The awake asleep thing shouldn't matter unless you're a day trader, and if you're a day trader, you're going to lose money anyway. The SEC thing doesn't make a difference. You have to get a little bit accustomed to foreign regulatory practices, but once you do, you sort of get to understand it. And your network should have no bounds, right? You can have a network outside of the U.S. too. So these two definitely outweigh the other 5 in my opinion. So what we're going to do here is we're going to go to a stock that we haven't looked at yet called Softbank. And I don't know a lot about Softbank, but I'm going to show you sort of how we would do it. And it's funny because the same skills you need to make an investment in the U.S. are the same exact skills you need to make an investment in another country. And if they're, what you guys may not know is there's a fantastic broker called Interactive Brokers. And Interactive Brokers, I think, lets you trade in virtually every country. So that including Japan, Japan's basically the second biggest market outside of the U.S. All right, so let's see how we would look at a SoftBank. So it's interesting. A SoftBank, their stock ticker is actually 9984. So in Japan, the stock tickers are, and you can see it's open right now, so it's actually trading as we speak. There's 54.93 right now. Oh, 54.95. We could have made 2 yen. Joking, of course, but SoftBank is 54.95 yen. So a yen, as you guys may know, yen is about more than 100 yen to $1. So it's like 55. Think of it as $55 for a stock, which is pretty reasonable. So it's 5,000 yen. Yen is about 112 right now. So if you think about it, the stock's trading for $49 a share. So buying 100 shares would cost you $5,000 roughly. Buying 1,000 shares is $49,000. Buying 10,000 shares is $500,000. Buying 100,000 shares would cost you $5 million. Of course, when you buy it, though, you don't buy it in dollars. You buy it in yen. So to buy 100 shares of SoftBank, you actually have to pay 500,000 yen. And if you're like me, and that's not a lot of money to you, and maybe you need 100,000 shares, you're actually buying 500 million yen worth of the stock. 500 million yen. So that's a lot. That's sort of a lot of money if you think about it to have in one stock. 500 million yen. But that's if you divide by 112, it's only $5 million. So anyway, that's sort of the thing. You buy and sell in yen. You buy and sell in yen when you do that. And so I'm actually going to save this file. What I like to do is I save it as the ticker. So I'm just going to save it as 9984, the same way I would save it as AAPL. I know that 9984 I know that that's SoftBank, and I've memorized that forever now. 9984 is SoftBank, the same way I know that 4502 is Takeda, 4503 is Astellas, etc., etc. I know that 9984 is SoftBank, and I'll always remember 9984. So if you go to Yahoo Japan, you guys may not have Bloomberg, but if you go to Yahoo Finance Japan, it's actually really good. And I used to go to this every night, and it looks hard to read if you don't know Japanese and kanji characters and romanji characters and things like that. But you can actually just type in 9984, and there it is. There's your stock quote. So definitely easy to look up stock quotes in Japan. And you can also use Bloomberg's website. So right now it's 54.95. So anyway, let's take a look at the way Japanese do their financial statements. And for Japanese stocks, there's no good website to go to. I just go to the company's website. I just go to SoftBank's website. I Google SoftBank Investor Relations. And you kind of have to futz around the internet to see if you can find it, but eventually you'll find it and you'll get a sense for what it looks like. And this looks like it would be it. And this is it. They all look like this. And you can see that they're in IFRS, which is the foreign equivalent to GAAP. So instead of GAAP is the US accounting standard, IFRS is international accounting standard. So keep that in mind. So there's a few things to learn like that, but this is actually what Japanese 10Qs and 10Ks kind of look like. They're numbered: 1, financial highlights; 2, financial position; 3, forecasts. And here they have this really convenient shares outstanding thing. So we can see that they have 1 billion shares outstanding. 1.182405. 1.182405 shares outstanding. And that was in Q415. Q415. So we can immediately calculate the market cap. The market cap is an astounding 6 trillion yen. So 6.5 trillion yen, which is $65 billion. And if you're from Japan, you got to just get used to dividing by about 100. In this case, it's 112, but you know, in your mind, if you want to do a quick shortcut, just take off 2 zeros, and you can see 6.5 trillion becomes about 65 billion. Of course, the yen is not at 100 yen to $1 exactly. It's about 112, so it's actually 58 billion. So that makes it a pretty big company. It makes it a pretty important company for tech. You can't just ignore Softbank. And if you're an American hedge fund, I can tell you a lot of these American tech investors will basically ignore it because they just don't want to. They just don't want to be bothered with a foreign company, and I think that's kind of silly. So let's see. Softbank 9984. It's just as big. It's just as big. It's bigger than Netflix. It's just as big as Priceline. It's not quite as big as the big kind of 6 companies we've looked at. Tech's biggest 6 companies: Apple, Microsoft, Facebook, Amazon, Tencent, and Alibaba. At least internet and software. So it's not a giant, but it's pretty big. I mean, it's bigger than Yahoo, it's bigger than Netflix, eBay, etc. Obviously, we're not looking at semiconductors and you know, everything else. And there's a couple of other big companies like Oracle and Cisco and IBM and Intel and Apple and TSM, and Qualcomm. But SoftBank is still a huge tech company by any metric. All right. So let me get rid of some of my non-finance stuff here. Okay, so then they go to the income statement and the balance sheet like any other SEC filing, or at least they should. Let's see. Sometimes, I know for the pharma ones, they usually keep it up front. So let's see how SoftBank does it. Looks like they have a lot more disclosures. But eventually you'll see a balance sheet, then an income statement. It's a big filing. Oh, the other really important thing to know, you'll see here in a second, is that the fiscal year in Japan always ends in March. This is pretty important. You learn this thing over time. And remember, Japan's the second biggest, basically, economy in the world. So learning Japan makes a lot of sense after the US. So Japan, fiscal year always ends on March 31st. And don't ask me why, I'm not totally sure. So fiscal year 2015 ends on 3/31/2016. And that could be a little confusing. But that's how Japan works. So you got to learn these little tools of the trade. But it's pretty easy other than that. So check out how much cash this company has. 3 trillion yen. 3.2 trillion yen. And that's not uncommon in Japan. It's actually a custom to hold extra cash in Japan. And the reason, I think, is that in the 80s, Japan had quite the crisis. Let's see if there's a good book on that. I'd like to read a good book on that. Let's see if I can find one. Japan crisis. Ramen? Here we go. Japan's financial crisis. Institutional rigidity and reluctant change. Japan's policy trap. Dollars deflation and the crisis of Japanese finance. That looks okay. Maybe I'll just get all of them. We need Japan financial. Sometimes people call it the lost decade. Let's see if we can find a book on that. All right, I'll just get this one. they call it the lost decade because they basically didn't grow their GDP, I think, for a decade. And one of the reasons is they had a credit crisis, if that sounds familiar. And now they're so conservative that companies like Softbank, you can see half the company is cash, which is a little crazy. Let's see, property, plant, equipment, goodwill, investments accounted for using the equity method. So if you add that, that's another trillion yen. So it's a 4.5 trillion of the $6.5 trillion company is cash or financial investments. Even more, 662, 462. Now they may have a lot of debt, so we gotta hold on there. But if you add these two, these financial assets, and then these financial assets, you basically have the whole company as a bunch of cash. Now here's debt. So thankfully, there's plenty of debt. That's good to know. So I guess SoftBank is actually leveraged. Most of Japanese companies, you'll see, have no leverage. So they have 5 trillion in cash, but they have 11 trillion in debt. So it's actually even bigger. Enterprise value-wise, it's a $13 trillion company, which makes it about 100 billion US dollars in enterprise value, which does make it a $100 billion company, which is a really rare entity. So we actually have to take these two and divide by the yen, and we can see that the market cap is 118 billion, and you can see that the net cash is very negative. Most tech companies, especially Google and Microsoft, but in fact all of these tech companies, you can see they've accumulated a lot of cash, whereas SoftBank has decided that they have that it would be good for their company to have an enormous amount of debt. And that's not unusual. When we look more into SoftBank's business, you might see why they've decided to do that. But SoftBank has an enormous amount of debt. And one of the best things about Bloomberg is you can actually look up debt. Debt is very easy to analyze on Bloomberg. So here they have $1 trillion of bonds. This is their biggest bond. It's 450 billion bond, and it's yielding 2.3%. So this is, we sometimes call these the 22s. I'll teach you a little bit about that. I'll put it over here somewhere. This is the let's just put down the maturity, 2/9/2022. The coupon is 2.5%, and the current yield to maturity is 2.379. So the debt of SoftBank is definitely trades very safely. This is debt that matures in 6 years. And if you look at JGBs, or the Japanese government bond, JGB, the JGB is probably yielding about 0 for a 6-year maturity. So that sort of gives you a picture of SoftBank has a lot of debt, but they're not, the markets don't think that debt is risky necessarily. So let's take a look. This is a $400 billion piece of debt. Sometimes we call them pieces. And it's the 1.26 coupon, and it's yielding 1.27. So it's basically no risk of default. It's also the shorter duration maturity, so it's closer to maturity. Let's look at another piece of their debt. And this is harder to look up without Bloomberg. I will say this is the one nice piece about Bloomberg. All right, so SoftBank 6% bonds. These are in US dollars. We should stipulate what currency they're in, because that will matter a lot due to the inflation of the currency. Here, these are the 2025 bonds. The 7/30/2025, 6% coupon, and these bad boys are yielding 5.685%. And these are traded in dollars. And these are 10-year bonds. So these are significantly more risky. This actually could be a good investment, in fact. We'll have to look at at SoftBank. But the nice thing about debt is you can decide whether the debt is the better investment or the equity. And a 6 a 6% return is pretty good. It's pretty good. The U.S. 10-year bond, which is about equivalent in duration, right? It's 2016. 10 years from now would be March 2026. This bond matures in July 2025. So the duration, which is very important in bonds, and we'll tell you why some other time, is about the same as a 10-year bond, and a 10-year bond is yielding 1.81%. Sovereign, I think that's how you spell sovereign. So you can see above the sovereigns, you're getting all this extra yield, about 4% extra. And it also gives you a hint at the discount rate. The discount rate's got to be something like 7%, since the far date bond is 6%, so the discount rate should be like 7%. Anyway, that's sort of a picture of Softbank. Let's take a look at the business itself. And just like any other business, you're going to have revenue, cost of goods sold, gross profit, all that stuff. You're going to have all your normal quarters. The only difference is your quarters will be slightly different due to the calendarization in Japan, where your fiscal year ends in March. So you're going to have it sort of look like this. Instead of the first quarter starts on April 1st and actually ends in June. So the fiscal years for Japan are all ending as we speak. So in any event, let's sort of just set this up, and I put this on the top so it doesn't confuse me. If there's any other, if it's a normal calendar quarter, I just put down the quarter names. But if there's a different calendar corresponding, like Q114, normally that means to me the quarter that ends on March 31st, 2014. But because this is Japan, it's actually the quarter that ends on 3 months later. It ends on June 30th, 2014. So I put that down there so I can kind of keep track if it's a different style of a company. All right. So here's Softbank's 9-month ended. I wonder if they give us a 3-month ended. Here it is. 3-month ended for December 31st, 2014. So I can just go here, December 31st, 2014, or December 31st, 2015, which is the one that we're more interested in. And you can see they did $2 trillion of revenue. The cost roughly $1.5 trillion. So the gross profit was 884 billion yen. SG&A. And you can see here that they don't break out R&D or anything like that. They just write, basically, here's our operating expenses. Here's our operating expenses. So you're not going to get sales and marketing or R&D. And there's some Japanese companies that give you that detail. These guys don't. It's their call. So it's going to be a little harder to analyze the business. But you can see they're a profitable company, which is one of the first questions I've had. All that debt basically wipes out their profit, as you can see. So they have EBITDA, but if you look at their actual net income, it's close to zero because the finance costs are so high. So their net income was only 2 million yen, which is like $20,000. Or is that 2 billion yen? I don't know. Let's see, 2,400. Yeah, it's 2 billion yen. That's only $20 million, which is not a lot for a $100 billion company. But we'll see shortly how that works. EBITDA. That's hilarious. I'd love to be an EBITDA. First I need a EBITDA babe. EBITDA babe. Alright, so again, we can just do the quarter before. Super easy, same way that we would do a US company. And you can see it's not that scary. You know, why be so scared of these international companies? It's not that bad. Come on now. Don't be a xenophobe. It's just Japan. Plus, you get to eat all the great Japanese food when you go visit the companies you've invested in. And it's just as tedious as American companies. You got to go fill out a bunch of quarters. And the cash flow statements and all that all exist here too. You can see here cash flow from operations was a lot better than the income statement makes it look. But they don't give 3-month cash flow statements, so keep that in mind. But if you look at cash flow from operations and you subtract it from CapEx, they're actually free cash flow negative in both 9-month periods. So somehow SoftBank is a $100 billion company that loses money. I have to sort of see why. I think it has something to do with their ownership of Alibaba. I think it has something to do with their ownership of Alibaba. So now we've got the basics down. It's a $100 billion company, but what is this company? What is this revenue? What do they own? It looks like they have a bunch of, oh, and here you can see a little bit of the debt. What's actually in their portfolio? That's definitely the one thing missing from these from the Japanese filings, the financial reports. They don't really have any commentary, or at least too much. So something to keep in mind. So I guess they own Sprint. Yahoo Japan. And Alibaba. Now Alibaba is a $150 billion company. So I want to know how much they own of each. They have a lot of cool properties here. I think SoftBank owns Sprint, yeah. Looks like they bought Sprint. Sprint Nextel. Looks like they own 72% of Sprint, and then there's this Sprint trading stub, basically. They own 72 to 83% of Sprint. The acquisition of Sprint was supposed to help Masayoshi Son realize his vision of transforming SoftBank into the world's most valuable company. Instead, this becomes his biggest setback. Masayoshi Son. Sprint deal has proven a dramatic blow. One of Japan's most enigmatic entrepreneurs. Looks pretty cool to me. I like the no tie. Who said he has a plan? Who said he has a 300-year plan? Holy shit. To build an internet empire unrivaled in profit, cash flow, and market value. Instead, as Sprint losses mounted, Sun found himself spending hours a night on the phone with its engineers and executives. The prospects of a turnaround may be slipping away, taking away precious time from the 58-year-old as he tries to secure his legacy. He was very overconfident from Softbank's success in Japan. With Sprint, it seems like Sun's luck with these big splashy acquisitions has run out. Softbank paid $22 billion for a controlling stake in the number 3 U.S. wireless operator. That investment has lost $7 billion, and Sprint is now number 4. So I guess the competition is what? Verizon, AT&T, and T-Mobile. Those are the 3 competitors, basically. Sun reminisced about his first trip to the U.S. as a 16-year-old. The experience inspired him to create Softbank, which he has since transformed to from a distributor PC software to one of Japan's largest acquirers with more than 1,000 investments. This is like a roll-up. This could be the Valiant of Japan. Although he did do the Alibaba investment. I remember these guys from a long time ago. I traded the stock in 2005. Anyway. He then tried to acquire T-Mobile to combine with Sprint, but regulators blocked him, scuttling his plans to achieve profitability in the U.S. market. The scenario's gone completely awry. It's becoming clear to investors just how high the hurdle is now. Six bonds coming due. It's $8 billion. You could just roll those bonds, I guess. Sprint booked its 5th consecutive quarter of losses. Softbank's biggest holding is Alibaba. So this is an interesting company. It's kind of a portfolio. It's a company that owns a lot of assets. You have to value them separately. Those kinds of companies tend to be traded at a discount. Berkshire Hathaway is a sort of a similar company. We sometimes call them conglomerates. Conglomerate. So their Alibaba stake is probably their most valuable asset, is my guess. Let's see if they can. This looks like they have Y Mobile, Softbank, Mobile, things like that. They have Sprint, Yahoo Japan. Now, their biggest asset by far is just the fact that they own some Alibaba stock a long time ago, basically. Sprint doesn't look very valuable. I mean, this is a $100 billion company, right? There's got to be something in here. I mean, it's certainly not their income statement. They lose money. And something that loses money shouldn't be worth $100 billion. So there has to be something that they own that is more valuable than that. Otherwise, it could be a great short. And that's, like I said, sometimes in Japan you have these very overvalued companies that stay overvalued. I know some of my friends are friends with the Softbank people, so I shouldn't talk too much smack. Shh. I don't need anyone saying, Martin Shkreli said to short Softbank. Shorting is a tricky business. People get angry when you short their stock. Like you insulted them on the deepest level. You know, the stock market goes up and down. It doesn't mean it's a bad company. It could be a great company, just a too expensive stock, you know? Okay. See if we can find anything on Alibaba. No. You know, one of the ways we can figure out how much they own of Alibaba is we can actually go to Alibaba's documents, which kind of makes sense, right? Let's go to sec.gov. We can quickly glance at Bloomberg to see Baba holders list. Well, this doesn't have SoftBank listed on there, but let's see if we can look at the ordinary shares, which don't trade, but you can see that SoftBank owns 32% of approximately of, it looks like, of Alibaba. And Yahoo owns 15%. And so if you add that up, 32% of Alibaba is worth, it's 179 billion. So that's 57 billion right there. Sprint is basically worthless. Sprint is worth 13 billion. Yahoo Japan, let's see what Yahoo Japan is trading for, 23 billion. But I don't know how much they own of Yahoo Japan. 46.89, 46.89. 43%. So basically SoftBank owns 80% of Sprint, 32% of Alibaba and 43% of Yahoo Japan. That's basically all that SoftBank is, as far as I can tell, is these three assets. So if you add that up, that's about 80 billion US dollars. The stock trades for 115 billion. So that's about 30% too expensive. Having said that, like I said, I haven't done the math too closely or carefully yet, but could be more or less, these numbers could be more or less than we're thinking, but that's a really important concept here. So let's see if we can gain anything from the documents. Maybe in here somewhere it'll talk about SoftBank. 20F is like the 10K for foreign companies. SoftBank owns 32% of our shares outstanding. That's a lot. When you own 32% of a $179 billion company, that's pretty great. It's a big asset. $190 billion company, according to this. Okay, so their properties are worth about $83 billion. And the intrinsic business doesn't look like it's worth anything. And obviously the way they're marking them on the balance sheet is pretty unique. So a bet on SoftBank is like an expensive bet on Alibaba. You could just buy Alibaba stock if you like Alibaba. So in Sprint, same thing. There's no real synergy between all of these, you know? They have these small they're sort of minority stakes in Alibaba and Yahoo Japan. They don't control Alibaba. They don't control Yahoo Japan. They're big shareholders, but they don't control these companies. They basically control Sprint. That's not terribly exciting. They have a few other companies. Supercell. I don't know what Supercell is. Let's see. Supercell. It's a video game company. They own 73% of Supercell. Supercell public? Doesn't look like it. Let's see, if Supercell annual revenue is $2 billion, it could be worth $5 billion. What do you guys think? Maybe more? 10 billion? So we're getting close to kind of getting, it's like a tech, it's basically a tech Berkshire Hathaway. That's what this company is. It trades at a premium to NAV or net asset value. But there's some businesses that they fully own, so it's not just a holding company. Gung Ho, Brightstar. So they have some regional businesses, but again, without profits on their income statement, it's kind of hard to value those. Berkshire has huge profits on their income statement. And it's kind of stunning to me that they don't mark their assets to market. Like, they should just mark on their balance sheet. If they were marking Alibaba at its current value, it would be a lot higher. But they're accounted for using the equity method, which is, I think, their cost. Oh, I was looking at the wrong, I put in the wrong number. I should be putting in this number. Let's do that. You see, I put in the March 31st instead of December 31st. So let's do that over. It's going to be the same, roughly the same number, but so double check. I see I made that error. A little embarrassing, but not too different. 100 billion yen difference. 1 billion USD. Or not even really. How about debt? Did I do the same mistake for debt? I did. So you got to be careful again. In the US, usually this column's the most recent, but here it's the other way around. So it's even more debt than maybe I thought. So it's a $120 billion company. They don't have any earnings. I don't think they're gonna have any earnings. It's a holding company, so all this stuff kind of doesn't matter. It's all kind of not applicable, you know? We'll worry about that some other time, but I'm just gonna mark that down as kind of not gonna really be that important, so we don't have to worry about it at this moment. Since it's all it is it's 30% of Alibaba, 40% of Yahoo Japan, and 70% of Sprint, which is down here somewhere. And the value is as simple as just adding those up, or at least it should be. A lot of these stocks will trade at discounts to their fair value just because owning 30% and 40% and 70% of a bunch of stuff doesn't get you that excited to own that portfolio. Brightstar I thought was a part of Brightstar Global Group. I thought that was a part of Sprint or something, but maybe not. Alright, so I think this is a good review of kind of looking at an international stock. This is a very unique company, Softbank, needless to say. The next one we can look at is Yahoo Japan, or Naver. Then we've got Rakuten, and then Zalando, M3, Kako, Rightmove, Auto Trader. These are all stocks that are not traded in the United States. Tencent was the other one. Tencent's definitely a good one. So it's good to get our list more and more populated. Next two big ones we haven't looked at yet are Priceline and Baidu, and of course Yahoo, which we're going to review on Saturday. So we're making a lot of progress. I'm going to keep working. I have a lot else to do. Make a price line model real quick. I think Yahoo probably is going to sell the company pretty soon. I think they're telling people who want to buy the company that they have to put their bids in very soon. I love Priceline stock prices, $1,000 a share. They don't want to split the stock. That's become more of a trend these days. That's why Google or Alphabet or whatever you call it is also in that high stock price. Let's see, Priceline's 10K just came out. 49 million shares. Unlike most of these companies that have 1 billion shares outstanding, they have less shares and a higher stock price, $1,000 a share. Now you can see they could easily have had the opposite, right? They could have 50, instead of 50 million shares and $1,000 stock price, they could have had 5 billion shares and $10 stock price. It all adds up to 64 billion market cap either way. So Priceline is one of the biggest companies in tech. And everyone knows what Priceline does if you've ever booked a trip or whatever. This is pretty easy to understand what they do. They're not one of these companies that puts a separate, doesn't look like they do a separate income statement. Yep, here it is. Not much cash on the balance sheet. Oh, there's another billion, but still not much. It's not like one of these big companies that's hoarded a bunch of cash over the years. They look a little bit more like a Facebook type. Oh, there's long-term investments of 7 billion. I guess I spoke too soon. Convertible debt, long-term debt, 6 billion. So about a 60 billion or so. $60 billion enterprise value. Let's look at their earnings. I wonder if they're a mature company or not. Priceline's been around for quite some time. Yeah, they're growing, but they're not growing like maybe they used to. Agency, merchant, advertising. They have three kind of businesses here. Let's see. Dagnabbit. Where'd it go? Man. All right, so 9 billion in revenue on and it's almost all profits. Isn't that incredible? Almost no cost of goods sold. I guess That makes sense. Look at advertising as their biggest. Look at that. $9 billion in revenues. Cost of revenue $600 million. Gross profit is $8.6 billion. And then their biggest two expenses by far, or their biggest expense by far, is about $3 billion of advertising. $3 billion of advertising. I'm going to put that advertising in one column. I don't think it makes a difference. And you can see how much advertising they do online. 90% of their advertising is online, probably through Google and whatnot. So they're probably a big customer of Google's. Fascinating though, right? Their salespeople, sales and marketing, is not much compared to the advertising that they do. Fascinating business. That's why we see so much Priceline on TV. So they still have a crazy gross margin, or operating margin of $3 billion or so. Really incredible business. $2.8 billion net income. All right. So immediately when I see $2.8 billion net income, or 2.5 if you look at their number, I exclude DNA, so it's probably closer to their number, 2.5. I immediately in my head say, okay, this is a $60 billion business. If I wanted to buy the stock, it's $60 billion for the whole company, and you could buy as much as or as little as you want in terms of shares. I immediately say, okay, so how many years would it take for me to get my money back? About 23 years. Is Priceline going to be here in 23 years? I don't know. I don't think so. It would seem like technology can move a bit faster than that. Now, earnings are growing, so it's probably going to be less than 23 years. Maybe it's 15 years or whatever, but we'll do our discounted cash flow. I wonder what technology could come out so that Priceline gets disintermediated. I never like looking at the EPS versus the net income. It's easier, it's much better if you conceptualize it as net income. Company makes $2.8 billion a year, not $54 or $55 a share. I always thought people that look at EPS is a little silly. It's cool that they break out their IT expenses. Isn't that nice? You basically never get to see that line of expenditures. Their IT to run all of Priceline is only $100 million. Think about that. Personnel. So that's just all employees. So they really break out. They really do a great job breaking out. I mean, I've never seen an American income statement. 1, 2, 3, 4, 5 different lines of expenses. It's pretty impressive, huh? My email address is shkrelimartin@gmail.com. Everyone has to email me their Yahoo models, and I will critique you. And again, anyone who emails me a model, I will eventually get back to and give you some pointers. It's my free service. I obviously disclaim that if I get too busy, I may not get back to you right away, or at all. But for now, I get a couple here and there. It's a lot of work. All right, so revenue grew 9%. So it's starting to be a little bit mature company. And, you know, in many ways, it's the brand that they have, Priceline, name your own price, etc. They really have a lot of mind share. But in tech, you know, these mindshare things can be fickle. I mean, Yahoo and eBay had great brands, and Amazon and Google quickly demolished them. So I think the discount rate for Priceline is significant, but let's do some more thinking. They really spend a lot on advertising to protect their brand. Isn't it amazing how their gross margin has gone up? And not only has their gross margin gone up, their actual cost of goods has gone down. Which is really, really remarkable. I mean, I don't understand how that happens. I've never, ever seen that happen. Not only higher margins with higher revenue, I understand, but declining cost of goods sold while you have increasing revenue, that's some kind of miracle. It could be an accounting thing with expensing former DNA and stuff like that. That's probably it. But it's pretty unbelievable. Alright, so I just wanted to get a quick flavor for Priceline. Revenue growth has definitely slowed down. How about Baidu? I don't know a lot about Baidu. And we have to do Yahoo. Let's see if we can do Baidu. Baidu's weird because they're a foreign company, but I think they file like the US company. Let's see if they file 6Ks and so forth. They do. Let's see if there's a Baidu in China that trades. It's mostly BIDU. That's it. There's no, that's the primary, looks like that's the primary security, is BIDU. It's difficult because you got to read these 6Ks instead of 10Qs, but that's all right. Priceline is easy because we kind of know what they do. We don't know exactly what how they do what they do. That we'll learn maybe later. Looks like Baidu gives us everything in the Chinese currency, which is a little frustrating. Let's see here. Shares outstanding. Class A ordinary shares. Par value is small. Authorized doesn't matter. And issued and outstanding. So 27 and then an additional 7. So it's like 31 million shares outstanding roughly, right? 34. And that's as of Q4 2015. It's $200 a share roughly, 35 million shares. It's a $6 billion company. That doesn't sound right. So these are ordinary shares. My guess is they're on some kind of conversion ratio or something. Let's see. One Class A is 10 ADSs. 10 ADSs. So it's really 279 million shares outstanding, or market cap. Of 53 billion. Okay, that's fair. How about cash? This is still in RMB, the Chinese currency. So whenever you have these mixed currencies, you have to write down kind of which is which, or you'll get confused. All right, so 9 billion plus all this stuff, so much. So now you have to convert to US dollars. And RMB to USD is 6.4897. So 11 billion in net cash, or 41 billion in enterprise value. Let's make sure I got all these right though. Okay. There we go. So Baidu is a little smaller than Netflix on an enterprise value basis. I barely know what Baidu is. I always hear that it's a Chinese, basically a Chinese Google, but I don't know anything about it other than what I've heard. So let's do the model. All right, so total revenue 18 billion. RMB, which is what, for a quarter, which is what, like 3 billion US dollars. So the annual revenue would be 12 billion US dollars. Just all these numbers should automatically be kind of going off in your head as you plug and chug, as we like to say. Cost of revenue is very different from Google and others. Well, it's not as bad as it looks, actually. I know that they've poached a few key programmers from Google. Looks like they had that big one-time gain. We're going to exclude that, obviously. And some crazy tax that corresponds with it, so we're just going to ignore that for a minute. Looks like they have these non-controlling interests. I should include these non-controlling interests because they're somewhat substantial. Net loss attributable to non-controlling interests. So they're add backs. In essence, they would be. I would subtract them from taxes. In essence, so they kind of understate their earnings, if you will. All right, let's look at some annuals, and we can really get a flavor for this company, at least financially. All right, so 66 billion, so that's like 10 billion US dollars in revenue on a 41 EV. And then on a net income basis, should look at EBITDA just because their other income is a lot of whack. So 11 billion EBITDA. Chinese taxes, I think, are pretty low. So 11 billion in EBITDA divided by, what's their renminbi, 6.5. Is like a billion, 1 or 2 billion in net income. It's like 25 times earnings or something. For a younger Google, just in China. I don't know, we'll have to think about that. Definitely interesting. Definitely interesting. Not even going to pretend that we're going to come up with any insights other than just getting a brief familiarity with the business. That's kind of what I'm doing right now. It's a little bit of mental downtime. Sometimes you just learn a business before you start investing and trading in it. That can cause you to, risking money is got to be very careful when you do that. If you're not careful, you can lose quite a lot. So you got to be very careful. Maybe, in fact, when I first started investing, I learned that lesson the hard way, and now, before I make an investment, I almost do painful amounts of research. Too much, some of my friends say. I prepare too much for my investments. Well, I'd rather do that than lose. I like losing money. Let me see if I can add these non-controlling interests back. Sometimes doing these minority interests and things like that will definitely mess with your head. Interesting that their EBITDA went down. I think you can see that. It went down. Their taxes went up so much that their net income went down year over year quite a bit. Quite a bit. And you could argue it's because of their R&D investment. You can see their SG&A investment, but it's very unusual. And again, just the same way R&D in US dollar, you can see 35% revenue growth. Really enormous revenue growth rate. Enormous. Let's do gross margin and operating margin. So that is best-in-class growth. Let's see how it did for last quarter. Looks similar. 33%. Operating margin. I think the margins are, the thing about a lot of these companies, including biotech and pharma companies, is that the margins are very flexible. They could have any margin that they want. They could just lower their investment in their company. Gross margin you can't really change. But operating margin, it's up to you how much R&D you want to spend. You can do a little, you can do a lot. Those are long-term questions, right? If you don't do any, your long-term outlook's not going to be good. Your near-term outlook will be great. And the opposite. But it also depends on the quality of the R&D investments you do. You could do very high-quality R&D investments and have both high profitability as well as a good future. It really depends. You can invest a lot in R&D and it could all be wasted. There's a company called Biogen that did that for many years. They wasted virtually all of their shareholders' money on R&D that didn't pan out. So Baidu's growing quite a bit. Let's sort of see
Let's read this. 2015 was a touchstone year for Baidu. We made significant progress in broadening our online marketing platform, further extending our reach into transactions services, said Robin Li, chairman and CEO. I don't know who this fellow is. I'll look into him. Robin Li, CEO, and Jennifer Li, CFO. Wait a second. Does anyone notice something here? If they are married, I will... No way they're married. No relation. Okay. Just happens to have the same name. Good. Looks like it's a very empowering workforce that employs many women. That's nice. Doesn't change the valuation, but that's nice. Maybe it changes their performance, and that changes the valuation. That's for sure. All right. Even as China's overall growth slows, services and domestic consumption are growing. Services and domestic consumption-related verticals are supported by the government's Internet Plus initiative and hold tremendous potential. I wonder what that is. Let me note that down. Internet Plus initiative. What is that? All right. Our top revenue verticals, retail and e-commerce, local services, financial services, healthcare, and education, reflect Baidu's vital role in connecting users and merchants in these growing sectors. Looking ahead, we will continue to grow to build the next Baidu, not only to benefit from, but also drive key secular trends of rising domestic consumption, growth in services, and rapidly evolving global environment. We're pleased to deliver a strong set of results. In 2015, we further executed on our vision to connect people with services and drove strong momentum in this area. We look forward to continuing this journey in 2016, further build up Baidu's online marketing and transaction services platform. As a reminder, as a result of Baidu's exchange of Qunar shares with Ctrip, Baidu deconsolidated Qunar's financials. Okay, Qunar, Ctrip. All right, mobile search, monthly active users were 657 million. Mobile MAUs, mobile map MAUs, GMV. It looks like they're kind of a cross between eBay and Google. Mobile MAUs are 657. That's a lot, huh? Looks like they have some kind of map service. Gross market value increased, wow, 400% year over year. They must have launched some kind of service. Baidu Wallet, 53 million. Cool company. Could be only a $42 billion company. I mean, Google's 400 billion. So it's a tenth of Google, and it's got all of China locked around its finger, it looks like. Pretty neat. Earnings-wise, looks like they're in that kind of 1.4 billion range, but they could be as much or as little as they want. Revenue growth being so fast, so it's a pretty affordable valuation with a lot of growth ahead of it. Baidu could be a tremendous long. Adjust the currencies, obviously. Very cool. All right, Baidu seems exciting. Get a brief look at it. We don't have to go into too much more detail. And finally, let's do a quick Yahoo, since we have to present Yahoo on Friday. We've done all the major tech, well, the internet and software companies at least. Internet and sort of consumer software, not business software. Where's Oracle? It's weird. Thought we were gonna do, we're not gonna do B2B software, just like internet. weird. I thought we were gonna do. I should just rename this then. It's just internet, right? That's fine. We can add software later. Yahoo. Man, Yahoo really messed it up, huh? They were there first. They were first to like everything. They could have had their own Netflix, they could have had their own Google, they could have their own Facebook. They missed all of those things. I mean, you gotta be terrible that you're in the center of the internet and you miss every possible opportunity. That's gotta suck. This is like the 25th time Yahoo's tried to sell themselves as well, so maybe they'll get it done this time. Microsoft or someone will buy Yahoo. So it'll be fun because this is a live thing happening kind of before our eyes, which is kind of cool, huh? All right, let's see. Yahoo has some Alibaba stock, if I recall correctly, and that is probably most of the value of the company. In fact, let's take a look at Bloomberg. Says that Yahoo owns 15% of Alibaba, which is worth $193 billion. So that's 29 billion right there of their 35 billion market cap. But let's see what their cash situation is. And you can see they do the columns backwards too, so we got to be careful. I remember one time I worked at a hedge fund and someone got the columns wrong, and the boss got really angry at that person. It was kind of funny. Ah, you can see they have the Alibaba right here. Wow. Debt or taxes. They have taxes for Alibaba that they'll eventually have to pay if they sell Alibaba. So the enterprise value of Yahoo is only $2 billion. So even though it's a $32 billion market cap, they have so much cash and investments that the actual enterprise of Yahoo is only worth, $2 billion or so. Incredible, huh? Basically, it means that Yahoo's worth more dead than alive in so many ways, and that their business is actually not worth anything. Let's keep hammering away at this though, because it looks like these numbers need a little more detail. Okay. Got that. Okay, got them all. Oh, I added the wrong column, so it's not that good. There we go. It's only 7 billion. Yeah, it's 7 billion. So Yahoo is worth 7 billion according to the enterprise value is 7 billion, which is about is less than Twitter. It's not quite zero, but that's why I double checked it. I put 7 billion here instead of the 1 billion. So it's enterprise value is about 7 or 8 billion. And you can see I have some profits. I've got some profits. It looks pretty cheap. Off the cuff. Revenue's declining a little bit, but it's not. Well, revenue's actually growing a little bit. Remember, they do it backwards, so it's pretty cheap. I buy some Yahoo. We got like no hedge fund investors. That's always a good sign. Hedge funds used to outperform the market. Now they don't. I remember when all the hedge funds bought it early on. They did really well. Then the stock has kind of gone down over the last year or two. But so it looks like a good value. Let's do some of the analyses. Of course, this is very preliminary. All right, $4 billion in revenue. Cost of revenue. They have this thing called TAC, traffic acquisition costs. Accounting for that is a nightmare. So gross margin's pretty high. They sort of have this messy, very messy business. But they're definitely EBITDA positive, so 600 million for that year. Let's do the other years. You see that increase in TAC, what happened there? Sounds weird. Seems weird. Private equity could buy Yahoo as well. Just try to cut all these costs out. See all these crazy line items of other income. 10 billion here, goodwill impairment charge. We need a non-GAAP income statement. But if we look at a cash flow statement, we might get a little more clarity. Let's take a look. Wow, quite a large cash flow statement. Let's just do a couple lines. Terrible performance in 2015. Mostly related to Alibaba taxes, as far as I can tell. Be a great investment. Problem is Alibaba's got, most of your investment is kind of clouded by Alibaba. If they spin out Alibaba, you've got a huge opportunity. And just a few months ago, you really had an opportunity to buy a Yahoo-based business for free, which isn't, like I said, it's not the most exciting part of the internet, but it's not like it's $5 billion in revenue is worth something. People always say, why would you want to buy Yahoo? Well, hang on. Well, the revenue is worth something. $5 billion in revenue is worth something. It's got to be at least worth 2 times sales, 3 times sales. So take out Alibaba, you've got you get maybe a $50 stock instead of 36. I guess that's not that thrilling. see Yahoo is sort of a lot smaller on enterprise value versus their market cap. We talked about that. All right, so hopefully you guys learned something. I'll just try to brush up on some of these companies. Didn't do a deep dive in any of them, but talked a little bit about international versus U.S. companies and why it's important to look at international companies and treat them the same way you would treat an American company. So hopefully you learned something. Thank you for joining me, and we'll continue this shortly. Thanks again. Bye.